And for a closer look at the markets here, I spoke to Marcus Padley from Paterson Securities. Marcus Padley, interest rates on hold and subdued retail sales figures. How did that combination play in the market today?
Well, a bit of a non-event at the end of the day. Ticky, everyone expected interest rates to be left on hold. Brokers are now commenting that a couple of them are thinking rates might go up in November, October. Some are saying not till next year. It doesn't really matter. I think the RBA are clearly on watch, just watching economic data. Their main fear is inflation. And the focus has now gone to the third quarter rather than the second quarter inflation numbers. So you've probably got 2 or 3 months of nothing happening and really not a lot of market reaction today.
What about the early lead from Wall Street? Was that a little encouraging?
Yeah, obviously a good rise on Wall Street, up 200 points. Our futures, though, were up sort of 60 this morning, and the market was only up half that much by the end of the day. I think we did a bit of a dash yesterday. The market's now up 8.3% in this recent rally. That's all good. A lot of stocks going into uptrend at the moment. You know, all you can do in this market, which we think is going to range trade, you know, for months, if not years, all you can really do at this stage is go with the rallies, but take profits when the time is right, rather than just sit in the market expecting a big bull run. We just don't think we're in a long-term bull run yet.
Now, speaking of rallies, Hills Industries' profits have quadrupled. What would have most pleased investors?
Well, obviously it sounds a great headline, Ticky. The share price was up 11%, but they had a lot of one-off items in last year's number, so their profit number's gone 48 million, 9.5 million, back to 40 million. So although it's quadrupled, it's still down on a couple of years ago. They're promising an increase in profit this year, and I think there's an element of when companies have had results, if they are reasonably solid, there's a bit of relief, because there have been so many profit warnings in the market running into the results season. Anything that sort of gets rid of that profits warning risk by having results has gone up. Most stocks have had results this week have gone up.
And what sense is there more broadly that risk appetite is increasing in the market, do you think?
Well, quite a lot. You really felt it this week, because metal prices are all up about 12% in the last 10 days or so. You've got the diggers and dealers pushing along the resources. The risk or the worries about China seem to have dissipated. You had the stress tests in Europe that were okay. There were some results in Europe from HSBC and BNP Paribas, and both went up 5% yesterday. The US results season has been really tremendous. Our results season started okay, so clearly with the market up 8% as well, the risk in the market is disappearing. But the game at the moment really is, if the market's going to range trade, go sideways for a while, the game is about picking individual stocks and, more importantly, avoiding the bombs. As I say, there are a lot of profit warnings at the moment. If you can just avoid those, you can probably do all right. But it's actually quite a good game for stockbrokers, because you've now got to apply brains and pick stocks. It's not good enough just to be in the market.
Marcus Padley, thank you very much for joining Late Line Business.
My pleasure, Ticky.